Hello, good morning and welcome to Business 360, and my name is Blyden Kim. On Business 360 this morning, oil ages up on Middle East uncertainty. We begin from there. WTI and Brent crude, the futures rose towards $92 and $98 per barrel respectively, as fresh U.S. military operation in southern Iran and ongoing peace negotiation kept investors on the edge. Still, oil prices are down sharply over the past week on signs that the U.S. and Iran were progressing towards a deal. And now to fast-moving cars, as Ferrari is to unveil $586,000 electric car loose. Ferrari is roaring into the electric era, even if many of its rivals are slamming the brakes. The iconic Italian supercar maker was set Monday to unveil the Luce, its first fully electric vehicle, in a high-stakes gamble that deep-pocketed buyers who shell out more than $586,000 for a Ferrari that hums instead of hawks. The four-door EV, the name of which means light in Italian, tops out at 193 meters per hour and marks perhaps the boldest transformation in Ferrari's history as the company tries to preserve its mystic without a signature row of a combustion engine. The new car is intended for global sale, although there's no release date for the US. The launch comes as luxury automakers increasingly question whether wealthy gearheads actually want electric supercars. Ferrari quietly delayed plans for a second EV model until at least 2028 due to weak demand, while Italian rival Lamborghini has abandoned a project to roll out a fully electric model in 2030. And back home in Africa and Nigeria. The United Kingdom has exempted Nigeria from a stricter compliance requirement under its new sanction targeting fuel refined from Russian crude oil in third countries, according to new guidelines released by British authorities and analyzed by S&P Global. The new import restriction, which came into force on May 20th, are aimed at closing the so-called refining loophole that allowed countries to refine Russian crude into products such as gasoline, diesel, and jet fuel before exporting them to Western markets. Under the latest rules, the UK banned imports of refined products including petrol, naphtha, paraffin, lubricant, and waste oil produced from Russian crude oil. However, Nigeria was listed among countries classified as net oil exporters that would not be subjected to stricter proof of origin requirement for fuel export to the UK. The S&P report stated, using trade data from the International Energy Agency, 63 countries were classed as net exporters exempted from stricter oversight, including Saudi Arabia, Kuwait, Kazakhstan, Libya, and Nigeria. The UK said refiners and exporters from exempted countries would not be required to demonstrate compliance with a new restriction unless British custom authorities had reasonable grounds to believe that exports were not produced from locally sourced crude oil. S&P Global said the tighter measures are expected to affect refiners in countries such as India and Turkey, which have emerged as the major buyers of discounted Russian crude and important suppliers of refined fuel to Europe since the outbreak of the Russia-Ukraine war. The report noted that countries and jurisdictions already operating their own sanctioned regimes against Russian crude oil, including the European Union, the United States, Canada, Norway, Switzerland, Australia, and New Zealand, would also be exempted from additional compliance obligation. Despite the tougher restriction, the UK government granted indefinite waiver for diesel and jet fuel imports due to concerns over supply costs and business impact, especially as tensions in the Middle East disrupted fuel supplies. As here from Nigeria's point of view, the federal government has cancelled $717.7 million in undisbursed World Bank financing for Nigeria's troubled electricity sector, effectively terminating the remaining portion of the $1.52 billion power sector recovery program amid mounting tariff shortfall worsening financial pressures and persistent implementation challenges across the country. A document on the bank's website shows that a cancellation followed a formal request by the federal government and a joint decision by both parties to discontinue financing under the power sector recovery performance-based operation due to evolving sector realities and the inability to achieve key reform milestones. According to the World Bank restructuring paper, the cancelled amount represents the entire undisbursed balance remaining under the program. The restructuring will result in a cancellation of the entire undisbursed balance in the amount of $717.7 million equivalent, and no further disbursement will be made under the program following approval of this restructuring, the bank stated. The bank also disclosed that the program's closing dates had been brought forward from June 30, 2027 to May 31, 2027, effectively ending the operation more than a year ahead of schedule. The council facility formed part of the broader World Bank intervention designed to revive Nigeria's struggling power sector. And now to the aviation sector, as the Airline Operators of Nigeria has denied claims that domestic airlines owe the Nigeria Civil Aviation Authority outstanding cost recovery charges, insisting that all regulatory services rendered by the authorities are paid for in advance. The dispute comes amid rising tensions in the aviation sector following NCAA's recent move of placing 11 domestic airlines, including AP's Ibom Air and Arik Air, on a no-pay, no-service list of alleged unpaid statutory charges. In a statement issued, the association described media reports accredited to NCAA as misleading and accused the regulator of attempting to use the media to pressure operators outside established procedures. According to the operators, all cost recovery services provided by NCAA are paid for before such services are rendered. The association classified and clarified that what the NCAA refers to as outstanding charges relates solely to the 5% ticket sales charge, a tax imposed by NCAA on passengers for no services rendered to passengers and not in consonance with the dictates of international aviation. The association added that some airlines previously operated a dedicated account from which remittances were made, but noted that global economic pressures worsened by Iran-Israel-United States conflict and rising jet air costs had strained operation. The group said it had appealed to the federal government through the Minister of Aviation, and Aerospace Development, Festus Keyamo, for temporary relief from statutory charges to ease cash flow challenges. According to their statement, President Bola Tinubu approved a 30% concession pending further government consideration of other relief requests. As you're looking at the aviation sector, the Nigeria Civil Aviation Authority has issued a public health advisory to airlines, air navigation service providers, and aerodrome operators following the outbreak of Ebola virus disease in parts of the Democratic Republic of Congo and Uganda. In a directive signed by the Director General of Civil Aviation, Chris Najomo, the authorities warned that although Nigeria has not recorded any confirmed Ebola case linked to the outbreak, the aviation sector remains a major frontline in protecting the country against cross-border transmission. In an internal memo, the NCAA said the authority is actively monitoring developments in collaboration with the Federal Ministry of Health, the Nigeria Center for Disease Control, Port Health Services, and relevant international public health organizations. There is presently no licensed vaccine specifically approved for Ebola virus disease, while treatment remains largely supportive and symptom-based. The authority listed symptoms associated with the disease to include sudden fever, severe weakness, persistent headache, vomiting, abdominal pain, and bleeding manifestations such as nosebleeds or vomiting blood. Meanwhile, the Customs Area Control in charge of the Semi-Area Command of the Nigeria Customs Service, Abdullahi Kaila, has stated that the command collected 9.789 billion naira in revenue between March 2026 and the present date. Akala stated this on Monday at the command in Seme, while addressing journalists on the command's operational activities and achievement in the areas of revenue generation, trade facilitation, and anti-smuggling enforcement since he assumed office in March 2026. He added that the figure represents an increase of 7.610 billion naira when compared to the sum of 2.188 billion naira collected within the same period in 2025. Akala attributed the achievement to strengthened compliance mechanism, improved stakeholder cooperation, intensified anti-revenue leakage measures, enhanced operational efficiency, and a strategic deployment of the Biodogu Unified Custom and Management Systems. And now we'll go on a quick break, and when we're back, Business 360 continues, looking at some Nigeria's perspective, global economic outlook, and the markets. Don't go anywhere. Welcome back. It's your Business 360, and my name is Bladon Kim. And now, to economic standings around the world and the market, and sticking with Nigeria's perspective first, where Nigeria Turkey signed mining cooperation deal. The government of Nigeria and the Republic of Turkey have signed a memorandum of understanding to strengthen bilateral cooperation in the solid mineral sector in a move aimed at deepening economic collaboration between both countries. The agreement was signed on the sidelines of the Istanbul Natural Resources Summit in Istanbul, Turkey, according to the statement from the federal government. Speaking during the signing ceremony, Nigeria's Minister of Solid Minerals Development, Dela Alake, said Nigeria is ready to leverage Turkey's technological expertise in mining exploration, training, and digitization, looking at systems and structures. According to the minister, President Bola Ahmed Tinubu has given full backing to efforts aimed at strengthening bilateral relations with Turkey in the mining and energy sectors. The minister, who also serves as chairman of the Africa Minerals Strategy Group, noted that reforms introduced in Nigeria's solid mineral sector over the past 3 years have improved the operating environment and increased its attractiveness to investors. And now, up next is global economic outlook as Sri Lanka delivers outsized 100 basis point hike. Global economic outlook. On global economic outlook, Sri Lanka delivers outsized 100 basis point hike. The Central Bank of Sri Lanka raised its benchmark interest rate by 100 basis points to 8.75% at its May 2026 meeting, marking the first rate hike since March 2023, as policymakers sought to curb inflation and support the rupee amid rising energy costs linked to the Iran conflicts. The move surprised markets with expectations of a hike of only 25 basis points or slightly more. Inflation accelerated to 5.4% in April from 2.2% in March, according to the central bank's 5% target, driven largely by sharp increases in domestic energy prices following persistently high global oil costs, while the rupee has depreciated about 8.7% since early March. Authorities have introduced fuel rationing, higher electricity tariff, and import restriction to ease pressure on the currency. The central bank said inflation is likely to remain above its 5% target in the near term before stabilizing. The decision comes ahead of an IMF board meeting that could unlock about $700 million in funding for the country. And back to Nigeria, still looking at global economic standings, Nigeria's gross domestic product, GDP, grew. And Nigeria's GDP grew by 3.89% in real terms in the first quarter of 2026 as the non-oil sector accounted for 96.08%. The National Bureau of Statistics (NBS) disclosed this in its GDP report for the first quarter of 2026 released. The first quarter GDP figure is higher than the 3.13% recorded in the similar period in 2025. Details of the report showed that nominal GDP stood at 110.79 trillion naira, while in real terms it is 51.26 trillion naira as of the first quarter of 2026. NBS further said that the services sector contributed more to the aggregate GDP at 57.73% in the period under review. However, when compared to the fourth quarter of the 2025, the country's GDP slowed by 0.1%. The report showed that oil sector contributed 3.92%, while the non-oil sector accounted for 96.08%. And now to the market, looking at the price of gold, the markets. And now to global market outlook as gold eases as Middle East uncertainty persists. A gold slipped below $4,550 an ounce today, apparent gains from the previous session as heightened uncertainty in the Middle East kept investors cautious about inflation risks. The U.S. military reportedly targeted missiles launch sites and vessels suspected of attempting to deploy mines in southern Iran, with U.S. Central Command saying the operations were aimed at protecting American troops in the region. Meanwhile, President Donald Trump said talks with Tehran were progressing well, although he warned that additional attacks could follow if negotiation broke down. Gold prices remained down nearly 15% since the conflict began, as fears of an energy-driven inflation shock reinforced expectation that the central banks could maintain tighter monetary policy for longer. And now let's go to the market. First, the metal market, afterwards the energy market, and even further, we'll look at the agricultural market. The metal market. The metal market begins with the price of gold. Gold price at 4,519 US dollars per ounce, are falling 49 points this morning. A negative 1.09% decline, and silver price dropping 2 points this morning, negative 2.65% decline. Copper price gaining but no significant change in the market, 0.02% at 6.3 or $6.34 per pound. A steel price at 3,163 Chinese yuan per ton, falling 26 points this morning. Now quickly let's look at the energy market, the price of crude oil. In the energy market, a U.S. crude price, which is popularly known as WTI, West Texas Intermediate crude, a price level stands at $92 US per barrel, falling by 3.6 points this morning, a negative 3.73%, and Brent, which represents Nigeria's price benchmark, dropping by 4 points at a price level of $99 US per barrel, a negative 3.86% decline. Now quickly let's look at agricultural market. Agricultural commodities begin with the price of soybeans in the morning market at $1,191 US per bushel, soybean dropping a 6.64 point in price, a negative 0.39% decline, and wheat price at $642 US per bushel, also dropping a negative 0.57%, a lumber price gaining slightly. The price of palm oil at 4,472 Malaysian ringgit per ton, dropping 1 point, and that is lowly a negative 0.02%. And now to the financial market, looking at FX updates, as Turkish lira depreciates by 0.52%. Talking about the top currency losers in the morning market, a Turkish lira dropped a negative 0.52%, the New Zealand dollar also dropping a negative 0.41%, Swedish krona falling a negative 0.27%, a British pound also falling just like the euro and Japanese yen. But gains are led by South Korean won at 0.38% and dollar index 0.12%. Let's go to the market proper then, the Euro USD market. Afterwards, we'll look at the state of the Naira. The Euro USD market. Euro USD market begins with a price level of 1.16 US dollar, equaling 1 euro. The euro struggling just slightly, but no significant change in the market. Volatility level of this market is quite low. The pound against the US dollar at $1.34, equaling £1. The pound also dropping a negative 0.18% against the US dollar. And now to the Nigerian currency, as Nigerian Naira begins week on positive notes. The Naira appreciated against the dollar at the official and parallel foreign exchange market on Monday to begin the week on a positive note. The Central Bank of Nigeria's data showed that the Naira strengthened on Monday to 1,374 Naira 91 kobo per dollar, up from 1,375 Naira 46 kobo traded last week, Friday. This means that the Nigerian currency grew slightly by 0.53% when compared to 1,375 Naira 46 kobo exchange at the end of last week. Similarly, at the black market, the Naira rose to 5 Naira, and moving at 1,395 Naira per dollar in the period under review. Meanwhile, the country's foreign reserves remain at $48.98 billion as of May 22, 2026, according to the Apex Bank data. The Naira dropped against the dollar on Friday last week to end the week on a negative note. Quickly, let's go to the market now. The US dollar against the Naira, and afterwards the cryptocurrency market. The US dollar against the Naira. A US dollar against the Naira price level stands at 1,372 Naira, equaling $1. The dollar gaining 1.7 points, but not much, a 0.12% appreciation for the dollar over the Naira. The euro against the Naira price level standing at 1,595 Naira, equaling €1. The euro struggling slightly, a negative 0.03% decline against the Naira. The pound at 1,848 Naira, equaling £1. The pound also falling by 3.3 points, a negative 0.18% decline against the Naira. Now quickly, let's look at the cryptocurrency market. A crypto market beats the price of Bitcoin even further. A Bitcoin price going even further at $76,639 for one Bitcoin, dropping 639 points, a negative 0.83%. Ether, on the other hand, also falling in that regard by 16 points. And even further, Binance dropping. The crypto market hasn't been positive this morning, showing negativity. Quickly to the equity market as we draw the curtains, looking at the Nigerian exchange. Investors gain 905 billion Naira at NGX. Investors at the Nigerian Exchange Limited added 900 billion Naira to their portfolio as equities kick off the week on a positive note on Monday. NGX data showed that the market capitalization rose by 0.57% to close at 160.982 trillion Naira on Monday, compared with 160.077 trillion Naira recorded on Friday. Similarly, the All-Share Index advanced by 1,412.65 points, or 0.57%, rising from 249,712.37 to 251.125. The market's year-to-date return also improved to 61.38%, reflecting sustained bullish momentum in the equities market. Even further, a market breadth closed positive with 35 gainers against 32 losers at the close of trading. On the table, the gainers top gainer was HL Africa, who led, rising by 10% to close at 3,655 Naira per share. And now let's go to the market, the Nigerian stock market this morning, before looking at the African stock market as we close. The Nigerian stock market. A Nigerian stock market, the component and price and percentage change for the day indicates MTN Nigeria at 820 Naira per share. No significant change in the morning market. Boa Food at 967 Naira per share. No change in the morning market. But Dangote Cement at 1,150 Naira per share, falling by 30 points, a negative 2.54%, and Boa Cement at 400 Naira per share, dropping a negative 20 points, that is negative 4.76%. Saplat Energy at 11,600 Naira per share, gaining 118.8 points, a 0.99% appreciation. Now let's close with the African stock market perspective from Africa. African stock market. We've already seen the progress from the Nigerian stock market, gaining just slightly in the morning market, 0.01%. South African stocks on the negative, and Egyptian stocks, EGX 30, also on the negative. There's a bulk we have to do when it has to do with the world of business. This is where we draw the curtain on today's edition of Business 360. Thank you for being a part of it. My name is Blyden Okem, and thank you for watching.